Hello, 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 powerful people. Welcome to the mini training. I'm Millen Livis, Holistic Financial Independence Mentor. Hello to my beautiful Instagram followers. Welcome to this mini training as well. I'm sure you agree that we are living in historic times and not in a good way. The horrible, terrifying war in Ukraine is still raging with no end in sight yet. The south border of the US is pretty much wide open, and 18,000 of migrants from all over the world are expected to cross it every day. And the official inflation rate in the US is now at 8.5%, and unofficial is over 15%. This is the highest in 40 years. Ouch. But I always remind my clients that we must practice focusing on solutions, on what we can do and what we do have. That's the secret to productive, abundant, and happy life. And on this positive note, today I will continue talking about how you can save your money on taxes, since the National Tax Day in the US is just around the corner in a few days, right? Full disclosure, taxes are not my favorite topic, but it's an important one indeed. Nobody likes to pay a lot in taxes, let alone having to deal with unexpected bill that can ruin your other plans. My daughter just got a large unexpected tax bill because she converted some of her IRA funds into Roth IRA, and that's a taxable event. I suggested that to her. So she got really frustrated about the fact that now she will have to pay a lot of money from her peace of mind, also known as emergency fund account, instead of going to yoga retreat. Anyway, the fact is everybody wants to know how to pay less in taxes, legally and ethically, right? So fortunately, there are some simple tax strategies that make lowering your tax payments possible. Now, full disclosure, I'm not an accountant, and you cannot take this educational training as any form of accounting or financial advice. Okay, tax strategies are not my forte. The only reason I studied them is because I don't like to pay more in taxes than I have to. And so today, we'll continue talking about legal and ethical ideas for saving money on your taxes. Now, I will not share all great tax saving strategies that are out there, right, in this mini training. But today I will share the last 4 out of 8 that I find most important to be aware of. For customized tax saving strategies, I suggest that you talk to your account professionals. So strategy number 5, tax saving strategy number 5 is take shares instead of dividend payments. Okay, take shares instead of dividend payments. If you have dividend paying stocks in your stock market portfolio, and you are in a position where you have other income sources and you don't need the cash from your dividends to pay for your everyday living expenses, then consider reinvesting these dividends into more shares of the same stock. So you will avoid paying taxes on the dividends that you receive. Why? Because your stock shares that you reinvest your dividends into will create a compound effect and will worth more in the long run if this investment appreciates. And you will only pay capital gain tax on these stock shares when you decide to sell them after holding stock shares for a minimum of 1 year. Long term, it's considered to be long term. Note that you pay much less on your stock share sale if you hold them for over 1 year, because you pay capital gain tax instead of your regular income tax bracket, which is usually higher than capital gain tax. For example, if you are single and your long-term gain is less than $41,675, the capital gain is 0. And if your long-term gain capital gain is under $459,750, you will only pay 15% in capital gain. So that's pretty good. Would you agree? All right. So I definitely like this strategy, and I have in my stock portfolio, I have a setting where all my dividends get reinvested. All right, let's move on to strategy number 6. Move to low or no income tax states. Well, there are places like Bahamas, Dubai, Monaco, where you don't have to pay any taxes. But that may require a change of citizenship, right? Okay, I'm just teasing you. In the US, in Puerto Rico, you literally don't have to pay any federal income tax. I found this out just recently. Now I know why one of my coaches moved to Puerto Rico from California. And there are states in the United States like Alaska, like Florida, like Nevada, like South Dakota, Tennessee, Texas, Washington, and Wyoming, where you don't pay state income tax, right? Because we pay federal and state. These states don't have state income tax. That's one of the reasons I moved to Florida from New Jersey, because New Jersey is the state that has a really high state income tax, and Florida doesn't have it. So just think for yourself if it makes sense for you to move to a state that doesn't charge you for state income tax. So if it makes sense, just make the decision and do it. All right, strategy number 7, make charitable donations. Money that you donate to charity is not taxable, right? You can deduct this from your taxes. This is usually why you will see very wealthy people donating a lot of their money to either their own foundation or someone else who is close to them. A great thing about having your own charity is that these foundations, like for example 401c3, have deductible expenses, because charities need things to operate, right, as charities, and these things are deductible expenses. Note that you can donate land, you can donate cars, equipment, or other assets to charities that you own and still count it as a charitable contribution. But that's not all. If you manage the charity yourself, you can still use the car that you donated on paper. You can still use the equipment that you donated on paper. Pretty creative, right? And legal. And that's what a lot of wealthy people do. All right. Finally, strategy number 8, track your medical expenses. Look, always keep your receipts. If you were in the hospital or some expensive specialist and had very pricey medical bill, always keep these receipts. The medical expenses can be deducted if they are more than 7.5% of your adjusted gross income for this particular tax year. Now, you can contribute to FSA, flexible spending account, and you can use pre-tax money to fund your FSA account annually, which allows you to lower your tax payments by a little bit, not a lot, but everything counts, right, when it comes to taxes. And you can use the FSA money for medical expenses. Note that there is a cap on this FSA. You cannot just contribute any amount. So what I know is that you can contribute up to $2,850 in this year, in 2022, okay? Because they adjust every year. Also, you can contribute to your HSA account, health savings account. An HSA account will also allow you to pay less taxes by contributing pre-tax money to your HSA account that can help you pay for your medical expenses as well. So HSA contributions are tax deductible, and withdrawals don't come with any tax or penalties if you use them for medical expenses only. Okay, so the cap, this account also has a cap. The cap for HSA contribution in 2022 is 3,650. So it's even higher than for FSA.